Ladies and gentlemen, it is time for a price prediction video. It is time to slap your girl's ass and get that cash if that's what you guys are interested in. Stay tuned for this video. We got a lot to cover. We got a lot of things that are going to be happening this week. A lot of moving parts to discuss with you guys. My daughter that's freaking out. Maybe I slapped the ass a little too much, if you know what I'm saying. Now, we need to get straight into this video. I don't want to waste time with the intro. Hit the like button. Subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Make sure to come join us on the live stream every single day, including tonight in between 10 and 11 p.m. Eastern Standard Time. Thank you for watching, and let's get to it. All right, so you guys already know the big catalyst for this week is Tuesday, 8:30 in the morning. You get core CPI month over month and the core CPI index, core CPI year over year, but the main one is going to be month over month. That is the one that is really going to make the headlines coming on Tuesday, and it's already expected to come in at 0.5%. And due to really energy prices going up, commodity prices going up, metal prices going up, right? Like nickel, aluminum. You've seen the short squeeze with nickel, right? That's gonna affect the CPI rating a little bit. So the markets are kind of pricing that in. We already expect a very bad CPI number month over month, and expected to come in at about 0.5%. Now, the problem is if this thing comes in at 0.6% or 0.7%, 0.6% month over month inflation would be 6% or 6.6% per year. 0.7% would be 7.2% inflation year over year. That's where the markets might start to freak out, but I think a lot of this is already priced into the markets. What I think is going to be as important, if not more important, I'm kind of leaning to more important, is the bank earnings. Ladies and gentlemen, this is a jam-packed week of bank earnings. JP Morgan Chase, Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, Ally Bank, PNC. These are all some of the largest banks. First Republic Bank. These are going to be very important. WAFT Bank as well. It's going to be very important. Why is it going to be very important, and what are the markets freaking out about right now? Well, let me tell you, the markets are really only freaking out right now about the Fed, how aggressive they're going to go, right? That's an obvious one. But they're also behind the surface kind of freaking out and trying to figure out when a recession will happen. So with these bank earnings, we're going to get a lot more glimpses into what is happening with the consumer. Are they going out? Are they lending? Are they not lending? Are they still refinancing? Are they getting houses? Are they getting auto loans? What is going on? What does their savings rate look like? You know, what is their velocity of capital in and out of their accounts? You're going to get a lot of data points from these bank earnings. Each bank, you know, they'll be different. Each bank kind of focuses on its own thing. Like JP Morgan Chase, they do investing, and they also do obviously trading on Wall Street, but like Goldman Sachs, that's mostly trading. So what are the wealthy clients doing with Goldman Sachs? What are people in general doing at Bank of America and PNC Bank? More so, I guess people's banks. So it's going to be very, very, very important. If we start to get this worry of the consumers starting to weaken, and we could be heading towards a recession here shortly in the next year or so, the markets are definitely going to freak out because of that. Now, if the bank earnings are good, the consumer is really good, that's going to be a reason for the markets to rally. If inflation comes in at 0.5%, the markets are going to rally off of that. Now, let's imagine the data for CPI comes in at 0.5%, right on expectations. Is that going to cause the markets to sell off in a big way? Absolutely not. You have to come in 0.6% or really 0.7% to see the markets react in a very negative way, because we're already expecting a lot of bad news. So it's basically like, hey, you're expecting bad news, you get bad news. It's not a big shocker, right? The markets, they care about those shocker data points. Now, the banks, that could be a little bit of a different story, because I don't think people are really expecting the consumer to be weak with the banks, and possibly the banks not making as much money. I think that could be a pretty big deal coming this week, and I think that's really the surpriser here, where it could go either way. It could be very good, or it could be very bad. I really don't have a huge opinion on that. Besides, I have seen people personally cutting back around me in my real life. Obviously, people got their tax returns, so they feel like rich as hell, right? I get that. I had to pay tax this year, so I'm not in that boat. I'm not in that boat, trust me. But nonetheless, could go either way. Keep that in mind. That's going to play into this price prediction that we are going to talk about here later on into this video. But those are really the things that are going to move the markets. You do have some Fed speakers later on this week. You do have PPI as well. That's going to be important. That comes in on Wednesday, and that's at 8:30 in the morning as well. And then not too much else after Wednesday. You do have initial jobless claims. That's going to be important, but the markets really don't like to react to that. Core retail sales as well. All of these things are going to be pretty important. Core retail sales could actually be a pretty big one, because if that starts to, wane and you start to see less retail sales, the consumer here, it's going to be pretty bad. Michigan consumer expectations. These are important surveys. 5-year inflation expectations, historically very, very important surveys. Michigan inflation expectations, retail inventories, excluding auto. So there is actually a lot of important data points on Thursday as well. Nestor speaks and a couple other Fed speakers throughout the week, but this is going to be a jam-packed week for data. So keep that in mind. That's what is really going to move the markets. Lots of headlines. Be nimble here. A lot of this could be seen as positive because the markets are already pricing in a lot of bad things. People are already saying, hey, the consumer is slowing down dramatically. We're already heading towards a recession, which I agree with that. But if the data does not reflect that right now, you will see a sharp rally to the upside. Do not be confused there. You will see a rally to the upside if some of those fears do start to subside. And I think AMC would be a big beneficiary of that, but we'll talk about that in just 1 second. Let's take a look at the Stock tracker data. And I do want to remind you guys, it doesn't necessarily matter how many options are on an expiration. It really matters what kind of FOMO you see, what kind of daily option activity you see, what are the volumes on these options, because we have about 17,000 calls that are in the money starting this week and about 218,000 calls that are out of the money for this upcoming week. Keep in mind, it is a short week, so Friday is closed in the market, so that's going to play a role into some of this, and you're going to see a lot of violent moves. I think it's going to be a pretty big week overall. You're really heading into Q2 with some steam here. The markets have, come down. They've come back up a little bit. So it's getting to be a very interesting level, let's say that. On the S&P, you're either going to 460 or you're dropping to 440 really here this week, in my personal opinion. But it doesn't matter too much what that out the money number is. It really matters, do we see that daily or weekly option volume really start to pick up? A lot of the degenerates, gamblers like ourselves, that start to buy those options for the weekly expiration. That's what will really move the stock in a meaningful way. Now, as far as the max pain, let's go ahead and pull this up. Pull up good old AMC, and that's looking at like $21 per share. Actually, nope, wrong expiration. $21 per share by the end of this week. So that would be a decent move to the upside. As far as the Ortex data, you're looking at 20.58% short interest of free float. Current shares that are sold short of 106.07 million. Cost bar max of 2.73%. Utilization of 100% and days to cover at 2.41. So definitely looking prime to see a short squeeze anytime, stock market God wants to give us one. Hedge funds, they really don't want to cover. They really don't want to cover. And that's a big key to all of this. As the business does get better, as liquidity does get restricted, shorts will eventually be forced to cover, but it's going to have to involve some level of catalyst, and then, there not being enough liquidity, or liquidity being hard to borrow and basically forcing them to cover. That's the only thing that forces shorts to cover. Think about 2008 when there was a lot of short squeezes, right? Volkswagen, Overstock, many other ones that just were not as popular, right? Didn't get talked about as much. that wasn't due to retail trading. That wasn't due to the retail investor. They were really not trading stocks in a huge way back in '08. It really wasn't as accessible as it is now, but they still got squeezed. Why? Because the markets were at their lows in October 2008 when Volkswagen and these short squeezes started to happen. It's because the liquidity dried up. So keep that in mind. Positive order value for last week was about 69%, 280 orders totaling $139.01 million. Even on Friday, the stock was down about 7.5%. 23 orders totaling $12.41 million, positive order value of 53%. So definitely looking pretty damn good there in my opinion. If we do take a look at the chart and the technicals, here's where the price prediction is going to actually come in. I'm going to hit you guys with another range because I don't know how these data points are going to come out. I'm not going to act like I do. Not going to act like I do. But I'm kind of leaning towards there will be a bullish response because we're pricing in a lot. The banks are what really throws me off. What is the consumer looking like? What does that data for retail sales come in on Thursday look like? That's going to be the main thing here, and I think it's going to be a pretty aggressive week overall. So I think if it's a bad week, you could be heading down to $15 or $16 per share. If it's a good week, you're heading back up close to $25 per share. That's the flat out honest truth. It's going to be a very big week. Lots of data, bank earnings, CPI, possibly war, Russia, Ukraine. The markets kind of are blowing that off right now. The markets are really focused on the data and the consumer, what you and me are doing with our money. And I know I've seen people cut back, but is the data going to actually suggest that right now? It's a tricky call. So what I like to say in the stock market, if you guys have never heard this before, it's better to be late than wrong. So with a lot of these things, if you want to trade them, you will make just as much or almost just as much money taking a lot less risk playing the after moves. You know, if it's confirmed retail sales are bad, shit is bad, bank earnings are terrible, you don't have to risk your money going, buying calls before that or buying puts before that. Just wait until after it happens and then play the trend after that. That's really what I have kind of been doing, with my degenerate gambling activities. But nonetheless, that's really the range that I see, either $25, really 21 to 25 if it's a bullish week. You're looking at 16, 15 if it's a bad week. The MACD is bearish and the RSI is at 44.29, definitely suggesting we should see a bounce here in the near term future. The stock is pretty much only went down, so you're definitely going to see a lot of momentum to the upside when that inevitably does happen. A lot of these guys that were trading the stock in here, they're just going to flood right back into the stock, and we are on our 50-day moving average right now. So if we do bounce on Monday, that's going to be very key. And I do think Monday is going to be the slowest day because you really don't have too much data on Monday, not too much for earnings as well. But if you do look, actually I should have put this sooner into the video, you do have Bed Bath & Beyond earnings on Wednesday that could move AMC and GameStop as well, but I don't think it's going to be a huge deal when it comes down to it. So that is basically that. Watch for that bounce off the 50-day moving average on Monday. If that does not happen, then that could be your sign that shit is about to get a little bit worse, but it's already gotten worse. So make sure you guys go watch my last video I put out. We went over a lot. That video is very, very important that you guys watch, especially heading into this week. It's a good one. Hit the like button, subscribe to the channel. If you guys want to come trade with us live in real time, link down below in the pinned comment. Come join us on the live stream every single night, including tonight, 10 p.m. to 11 p.m. Eastern Standard Time. We'd love to have you over there. Try to answer all of your questions. We talk about trades. We look at the futures. We look at the news. What is going on in the world that will affect the stock market. We look at all of that. So come join us. We would love to have you. So that's going to be all. Thanks for watching, and I'll see you in the next